Bitcoin. Welcome back to another episode of TA with MK. My name is MK. And in today's episode, we're just going to give you a quick update, kind of a follow-up to the video I made a couple of days ago on the price of the asset known as Bitcoin. And then also, I'm actually going to give you a sneak peek to the coin number 4 of 10 that's part of my series, the top 10 coins that I personally feel are good investments during the bear market. We've done 3 coins already. I'll leave links in the description to each of those 3 coins. This is going to be number 4, so I'll give you a sneak peek to that in today's video, and then in a couple of days the actual video about that coin will come out. Now, the bulls have definitely been in control of the price of Bitcoin for basically the past 30 days or so, since kind of the 20-ish of March. And, you know, there's some signs in the water, if you're one of those people that can read the tea leaves or whatever, that the bears may be possibly stepping in to take over control. We're going to discuss that a little bit more in today's video as far as the prices that the bulls need to regain, at least in my opinion, in order to keep this rally intact. And if these said prices that we discuss aren't gained, that really this is, you know, possibly a good area to look to actually short the price of Bitcoin, at least, you know, kind of in the short to mid-term. Now, if all of that sounds interesting to you, please remember before you watch the video to go ahead and take just a second and remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. Now, in our last video, we discussed the DXY, which is the US dollar currency index. You can still see the squigglies on my chart, actually. We talked about the idea of a big double bottom potentially here on the daily beginning to form. And the idea here is that, for those of you that are new to this chart anyway, this kind of has an inverse, you know, correlation to, you know, risk on assets. In general, we'll just say stocks to keep it a little more simple. Typically, if this is going up, you know, stocks are going down. If this is going down, stocks are going up. It's not as simple as that on lower time frames, but on these bigger time frames, things like the daily and the weekly, it is more relevant. And so as this is looking to put in a bounce kind of at the bottom of this blue area of support that I have, which is really right around 100 on the DXY, what we're kind of anticipating, or at least what I spoke about in the last video, is a potential move at least to the top side of this blue zone, and maybe even a breakout, as we can see I was talking about in the last video. And if that happens, at least a revisit of like somewhere between 105 and 106, which would be the neckline for this potential W pattern that's forming. And even if it gets rejected at that point, this move right here, just between where we're at now and 105, 106-ish, would likely represent at least somewhat of a pullback in the general market as a whole, and most likely Bitcoin, maybe even a little bit more on the Bitcoin side, just because it's a little bit more of a risk on asset. We'll discuss some price targets on that, or at least some areas of interest in just a second, but I just want to put this again on your radar. It's something I'm tracking. As far as the next big rally in crypto or Bitcoin, what we'd really want to see is either complete sideways out of the DXY, where it just kind of hangs out at the level it's at now for weeks, maybe even months. That's probably unlikely. Or the bigger chance of a breakout for crypto would be a breakdown of the 100 level, something where we revisit back kind of to some of this other support down here, like 97, of course, even lower in the mid 90s. That is unlikely to me at this point. However, it's still something to keep in mind. If you see the DXY beginning to trend lower, then of course that would leave some room for Bitcoin to, in the short term to midterm, trend higher. Another chart that we discussed in the previous video that I made a couple of days ago was the SPX, which is the S&P 500. Just wanted to give a quick update on that. We discussed the idea of a potential double top, which was kind of in confluence with the ideas that I was speaking about, as far as at least a short to midterm pullback out of stocks, and of course Bitcoin to follow. And what a double top is, just to kind of go over this again, is basically when price action gets rejected at the same level twice. Essentially, it creates what a lot of traders call an M pattern. Price action comes up, gets rejected. Of course, this is when we saw the last pullback, which happened between kind of early February and mid-March. We were back at that area as of just a few days ago on like the 23rd. I discussed in my video the idea that, hey, if we see a breakout of this, in a retest and we start moving higher, great. Good chance Bitcoin hits the 32,500 target we've been talking about for some time, and maybe even higher targets like 34, 35K. However, What I was concerned about was, that it wasn't showing signs of strength at that level. And if it gets rejected, it will form, again, what we would call, a double top in trading. Just the same area gets rejected. And at that point, you kind of have to assume that we're at least going to visit this level back down here, which would be about 39.30. And, of course, if that breaks down, it creates, kind of fulfills the entire M pattern. You're looking at a potential pullback as deep as like 3,800-ish, would be kind of be the next major level of support. And, in correlation or in confluence with that, we'd expect some sort of a move back down to lower supports out of Bitcoin. Now, before we move on to the Bitcoin chart, one thing I wanted to just quickly mention, and this will also be relevant when we do get over to the Bitcoin chart, is a lot of times when things on these charts are oversold or overbought, either one, if the price can just consolidate or accumulate or whatever at those levels, the longer they can at those levels, the more likely that the price is actually going, or the indicators are going to reset and price can continue in the direction it was already going. And the reason I bring that up is you look at something like the stochastic down here. It's been moving to the downside, which of course price action is of course beginning to move to the downside. You can see the last time it moved to the downside, price action up here moved to the downside, right? But at the end of the day, if it reaches that area and we haven't seen any major pullback, so say this is able to come down here to somewhere back at these levels that it always seems to bounce at, this indicator that is, which is basically back down around anywhere between like 6 and 10, which is considered the oversold areas, right? At that point, if it hasn't broken down, too far, or it's just kind of went sideways, this is naturally going to reset. We could start looking for the, the trend, which in this case has been in a short-term, uptrend, to possibly continue. And now, last but not least, that brings us over to the Bitcoin daily chart. Just kind of want to give a quick update on, key levels to do with the daily, and then we're going to zoom into the 4-hour and kind of explain why I am currently actually shorting the price of Bitcoin. Now, that being said, I'm going to explain kind of, the reason that I'm shorting. Number one, of course, some target areas that I have, and then, my invalidation, where would be the area that would invalidate the reason I opened the short, would cause me to close it and maybe even flip to a long position. But first, here on the daily chart, if we're talking about important levels or just kind of updating again from the video from the other day, I talked about this big zone of, currently it'd be support because it's below us, but this big orange zone I have on my chart that was resistance, here, and again here, like in summer of last year, 2022, August, and again a big rejection in mid-February of this past year, or the beginning of this year, and this area that we spent all this time below ever since the dump back in June of last summer. And we had the big breakout with volume down here. And now the question is, are we looking to possibly retest that area as support, before we potentially move upward and onward to higher prices? So that big level I talked about in the last video was basically $25,000. It's not an exact level. It is more of a zone that ranges between like 24,800 on up to like 25,500. But basically on a time frame like the daily, which is what I'm on right now, where I saw or where we see some of the biggest volume that had come in was right around the breakout of basically $25,000. So what does that tell me? That was a key level where the buyer stepped in. It kind of validated this breakout. And now at this point, if we see a breakdown, in the short to mid term over the next week to week and a half, 2 weeks, the level that needs to hold, at least in my opinion, is $25,000. Now, again, I mentioned in the last video, we do have some support down here. I'll mark it on the chart. I guess I forgot to last video. Let's do it this time, and that is basically right around the $27,000 area. You can see back here we had a big bounce back in May of this past year, and then most recently we were consolidating a bit at that level before we saw the move to the upside, and it's the same level that we've most recently bounced at, or at least are bouncing at right now. Now in just a second we'll zoom into the 4-hour time frame, which is the time frame that I'm actually using as kind of the reason that I opened up a short position. But I just want to quickly bring up those two levels as being the levels of importance as far as support should we break down from this level. But as far as upside continuation, the biggest area is basically $29,000. It's really like right around 28,800. But if on a daily time frame, which is what we're on right now, now, which the candle's already closed for today, but let's just say tomorrow or the next day, we're able to break back above and flip $29,000, which is this level back here that we were bouncing at a bunch between like May and basically June before we, of course, pulled back. If we could flip that as support again, then at that point, this move was kind of considered a bull trap, but if we're able to flip this back as support, well, then this most recent pullback, or at least the second half of this most recent pullback, would be considered a big bear trap, at least in my opinion. And at that point, we can start looking back at the targets we've been discussing for the past month or so, or 2 months. Again, that would be a revisit of probably like 31K to begin with. Most likely we'd flip that. And the big thing we'd be looking at, which is the target we were discussing for quite some time, which would be right about $32,500. So of course, that is very much a plan A, plan B type of scenario. But if we zoom into the 4-hour chart, you'll kind of understand why, at least in the short to midterm, my bias is to the downside. Now, if we zoom in, we can see just some of the patterns that I guess I was charting during this whole upside move. We had essentially what we call an ascending triangle, which is where price action had been consolidating before we saw this nice breakout. One of the biggest problems I had, or do have with this breakout here, is there really wasn't a lot of volume to support it. You can see that back here, during the whole move higher, let me get this out of the way a little bit, maybe move the chart over so my head's not in the way, but you can see there was a lot of volume during these moves that we talked about, even on the daily chart. This big breakout here, I guess that was actually more of a retest of like the $20,000 level. We saw a big spike in volume there, and then we also saw another big spike in volume when we broke $25,000. But what we didn't see, and what concerns me, like I just said, was just that we didn't see really a spike in volume when we broke above the 29K, which also makes sense that when this pullback began, a lot of times what we like to look at for entry ideas is what's called a retest. If you don't get in on the breakout, in this case that was 29K, you look for the potential retest of that level. However, because there wasn't volume there, that tells me that that area really wasn't an area, at least in the short term, of significance to some of your bigger, players, right? Your market makers, your Wells, etc. And so now again, as we broke down from that, we put in the short term a double bottom, where price action bounced twice. We broke above that. There is a measured move for that, which essentially would put price action back up to around where we're at now. But the reason that I opened up the short, I do think $29,000 in the short term is still a possibility. And in fact, on my trade, which I'll post on the screen, my stop loss is actually just above 29,250. It's above these wicks right here. You can see this big wick here, as well as a big sell wick here. That's really right around 29,150, but I put my stop loss just a little higher. But if we're able to break above 29,000 and flip it, again, like I said on the daily chart, then I'm not looking to short at that point. I'm actually going to start looking for a long. But at this point, we have a few things in confluence with the idea of why I think a pullback from this area would make sense. One, of course, being that we're just retesting or about to retest that same level that, again, we broke out of but did not see volume. We broke down from, actually saw a little bit more volume on the breakdown, but still nothing significant, nothing to tell me that this area really is an area, at least right now, that buyers or sellers are really all that interested in. So there's a very good chance that we do see a pullback from this area based on that. Number two, you have this yellow 200 SMA, which is the 200 simple moving average on the 4-hour time frame, which is a time frame I like to open a lot of my short-term trades on. You can see kind of right now, if we zoom in, that we're starting to see a pretty good sizable sell wick right now, and a lot of that's probably based on the fact that some of the people that are watching the 29K level are front running it based on the fact that price action is currently retesting this 200 SMA, but instead of as support, it's retesting it as resistance. Okie dokie, so now I've cleared the chart back up. Just going to quickly go over my targets and of course my invalidation. Now the invalidation is pretty simple. It's just $29,000. However, this is a kind of a 4-hour time frame trade for me, which of course it's easy, or you often see spikes above levels like that before, being ultimately rejected. So my stop loss that I've set, which is just my own personal preference, is actually set at 29,250. However, if you were looking to, eye a long from this area, For me, that would be a break and, a 4-hour or a 12-hour candle close above $29,000. At that point, again, I'd be looking for those higher targets we talked about, 31,000, 32,500, and so forth. But as far as if this short trade works out, or based on the ideas that I just discussed, you can kind of break this entire price action dating back to like March 23rd into a range low, a mid-range and a range high. So with that being said, targets for me are pretty simple. Now I'm actually using 4x leverage, which of course I will leave a link in the description to a video that I've put out for KUCOIN specifically on how to leverage trade. I would recommend watching that if you're new to leverage trading. I would actually recommend watching it several times. You want to wrap your head around or have a good grasp on leverage trading before you start throwing your money into that part of trading. But that's what I'm actually using is 4x leverage. So where my targets are, of course, they're tighter based on the fact that for every percent move for me would be a 4% move. So my first target's back down here at the mid-range, which is about 27,800 at the mid-range of all this recent price action that is. Now for me, or for this trade, that would only be like a 2% move for a spot trader that was shorting the coin. For me, that'd be like an 8% gain. So I would move my stop loss to break even at that point, shave off some of my profits. Target 2 for me, which is where I would shave off probably another half of what was left, would be back down here at about just above $27,000. That you can see is about a 4.5% move, which is like an 18% move, for me using 4x leverage. And ultimately, if we're able to, if we end up ultimately breaking down, the key level that governs my higher time frame ideas as well is basically 26,500-ish. You can see that back here, this is the area we were bouncing at. There was wicks as low as about 26,500, 26,600. If we break down, from that level, at that point, this would be a short that I would probably add to, but at the very least, just stay in what was left. And most likely, you're going to finally see this move that we're discussing, or at least at the beginning of the video, we discussed the idea of a potential retest at some point of $25,000. So just kind of giving you guys my thought process, where my targets are in the short term on this trade. Hopefully there's some value, in kind of seeing how I went about that. And to finish out today's video, just a quick sneak peek at the coin that I'll be doing for my series of the top 10 coins, in my opinion at least, that are good to accumulate during the bear market. This is the sneak peek for coin number 4 of 10, and that coin is going to be openocean, which has the ticker OOE. This is a coin that I actually traded on a few different occasions during the last bull market, and I'll explain in the next video kind of why I'm bullish on this coin. When I traded it during the last bull market, it had actually nothing to do with the fundamentals of the coin. In fact, I still don't know a ton about the fundamentals of most coins. It's something I'm just now getting into. I had a Discord that I was part of that had a member that was big on this coin. I knew that he knew his stuff, and so that was the reason I even looked at the coin, but I traded it based completely on the chart, which we'll just quickly look at here in a second. But just to give you a heads up kind of on what it is, just for the sneak peek, openocean is a leading Web3 DEX aggregator. It says the leading DEX aggregator offering the best swap returns across 22 chains. And then of course they have their link to their website, but I'll leave that in the description. But we will make a video that'll come out in a couple of days where we'll dive very deep into this coin and discuss why I'm bullish on it. If you look at its chart, there's a lot of good things to see. First and foremost, if you just kind of zoom in to this large falling wedge, we're on the daily chart right now, you can see that there was a double bottom here inside of the falling wedge, then a breakout. Basically, the 200 simple moving average was initially acting as resistance after that breakout, but it's been able to get above it, and currently it's actually acting as support. It did have a pretty good sizable pump back in February. It ultimately found resistance up here at the 200 EMA, which is the 200 exponential moving average. But what we'd be looking for, that we'll discuss more in length on the next video, is some potential sideways accumulation for maybe the next month or so, as it ultimately creates potentially a rounded bottom, creates a new support level, higher than the support level down here, and ultimately breaks above at some point the 200 EMA. All the moving averages come together, and we get a big impulse move up here, which of course, again, I'll discuss in the next video some of the potential targets that I'll have for this coin. But just know that there's some pretty sizable moves that definitely would occur should that breakout happen. Now, of course, we will save that for the next video, but one thing that is customary with these sneak peek videos is we'll take a look at where was its all-time high price from the last bull run and kind of how far down from that price are we. That way we can get an idea of, hey, if you were to invest at this point in time into this coin and, you know, gets some momentum in the next bull run and reaches its all-time high again, what kind of gains or potential gains could you be, you know, looking at? So now that we're zoomed out, we can see that the all-time high, at least here on KUCOIN, if we just kind of ignore whatever the heck this, I guess, introductory to the exchange sell-off wick was, basically is $1, a little over $1.03 to be exact. And if we look where price action is at this current point from that, we can see that it's just about 97% down, which is obviously substantial. Not necessarily any different than a lot of the small cap coins, of course. It's very much in alignment with a lot of the coins that we look at. It's just that this is a coin I believe will recover at some point and, you know, get back to that price. You know, would it happen in the next few months? I don't know, but definitely sometime in the next couple of years, I would expect this coin to reach that price again and above and beyond, to be honest with you. So that's one, I guess, pro going for the coin is at this point, it's 97% down from its all-time high. And what kind of gains would that potentially be if we go the other direction? If you were to invest in this coin, you know, say today, and it were to reach that price, you're looking at something like a 3,700% gain or a 37x. And that, my friends, is nothing to cry about. So stay tuned for the next video coming out in a couple of days where we'll do a full deep dive into OOE or open ocean. Kind of give you guys the reasons why I put it as my number 4 out of my top 10 coins to accumulate during this bear market. I appreciate each and every one of you for stopping in, taking a few minutes out of your day to watch my video. And as always, if you could do me a favor on the way out, if you haven't already, please remember to like and subscribe. We'll catch you in the next one. It's